All right, let's talk Nextracker. Their Q2 earnings just dropped, and man, it sent the stock flying after hours. So we're going to break down exactly what happened, the numbers, the strategy, and what this all could mean for investors.
And when the market opened the next day, wow, the reaction was immediate and pretty decisive. The stock just shot up 8.7%, and on heavy volume too. You just don't see that kind of move without some serious investor approval behind it.
So, what's the deal here? A jump like that? That's not just random market noise, you know? That's Wall Street saying, yep, we believe the story you're telling. They bought in, hook, line, and sinker. The big question is, what exactly did Nextracker say that got everyone so fired up?
At the heart of it all is what we in the business love to see, a classic, clean, beaten raise. And look, Nextracker didn't just kind of squeak by the estimates. No, they blew right past them and then had the confidence to raise the bar for the whole year. Let's get into those headline numbers.
I mean, just look at the size of this beat. Adjusted EPS, $1.19. The street was looking for about $1.01. That's an 18-cent beat. And revenue, they pulled in $905 million when the consensus was sitting around $845 million. That's a $60 million surprise. This wasn't a squeaker. This was an absolute blowout.
And that revenue number, it tells a really important story about accelerating demand. We're talking 42% growth year over year. In an economy like this one, let me tell you, that kind of powerful top-line growth is exactly what gets the market's attention and their dollars.
Okay, but what about the future? Well, let's look at their backlog. This is basically the line of customers waiting for their stuff. It's now at a record, get this, over $5 billion. For a company this size, that's just incredible. It means they know where a huge chunk of their revenue is coming from for a long time. The demand isn't just a flash in the pan, it's locked in.
And the best part? They're fueling all this growth themselves. Their balance sheet is an absolute fortress. We're talking $845 million in cash and zero debt. Nothing. Nada. That gives them so much freedom to play offense, invest in R&D, make acquisitions, or just easily ride out any economic storms that might come along. Right, so these incredible numbers, they didn't just fall out of the sky. This is all happening for a reason. It's the payoff from a really smart, really aggressive strategy to build a wider competitive moat around their business. So let's unpack the big moves they just announced.
They rolled out a three-part plan, a real triple threat. First, they're buying a company called Origami Solar to bring some really advanced frame technology in-house. Second, they're launching a new product, NX PowerMerge, which helps them grab a bigger piece of the pie on the electrical system side. And third, they're creating Nextracker Arabia, a JV to build their stuff right there in the Middle East and North Africa, a huge growth market.
And you know, the CEO, Dan Sugar, he summed it up perfectly on the earnings call. He said they're building an integrated technology platform. Now, that might sound like a bit of corporate jargon, but it's actually huge. It means they're not just selling solar trackers anymore. This is a total shift in who they are and what they sell. And that's why this whole platform idea is such a game changer. It lets them sell more stuff on every single project, which means they get a bigger slice of the customer's budget. We call that increasing wallet share. Plus, it opens up brand new ways to make money. And maybe most importantly, it helps protect them from all the crazy supply chain and tariff headaches by building things closer to home. Okay, so let's recap. We've got a massive earnings beat. We've got a super smart strategy to expand their business. The last piece of the puzzle, the thing that really lit a fire under the stock, was how confident management is about the future. And they didn't just talk the talk, they put their money where their mouth is with the updated guidance. And this is the raise part of our beat and raise story. They jacked up their forecast for the whole year. They're now guiding for revenue somewhere between, call it 3.3 and 3.5 billion, and earnings per share between 404 and 425. That's a huge signal to the market that, hey, that awesome Q2 we just had, that wasn't a fluke. That's the new normal. So what should you be watching for over the next few months? Well, there are a few key things to keep on your radar. First, circle November 12th on your calendar. That's their Capital Markets Day, and that's where they're going to lay out the whole long-term game plan. Beyond that, we'll be watching to see how quickly they can ramp up sales of those new Origami and PowerMerge products, and of course, how the new joint venture in Arabia starts to come together.
All right, let's pull it all together. A monster beat, a killer strategy, and guidance that points straight up. So now for the big finale, our take. This is the next call. If I was in a room trying to convince my team what to do with this stock, this is exactly what I'd say.
For me, this is a no-brainer.
The rating is a clear outperform. I mean, all the evidence from this quarter just screams buy. This is not a stock you sit on the sidelines and watch. This is a name you want to own.
And here's the core thesis, boiled down. First, price action. I fully expect this upward move to continue, probably testing new all-time highs. But why? Because the story around this company is changing right before our eyes. They're going from being just another company that benefits when solar is hot to being the company that's actually designing the category. They're becoming a category architect, a true platform with better margins and a tech advantage that's just getting wider and wider.
So there you have it. That's our take on Nextracker's absolutely blockbuster quarter. This is a company that stopped just riding the wave and has started building the whole ocean. And as always, just a quick reminder, this analysis is for informational purposes only. It is not financial advice.